Alright, let's be honest, folks. When you hear the word taxes, what springs to mind? Probably not sunshine, rainbows, and a basket full of puppies, right? More like a looming cloud, a bit of a headache, and that sinking feeling. For the self-employed, this feeling can be amplified. You're the boss, the creative genius, and your own accounts department. The year 2025 is on the horizon, and with it comes tax season. Knowledge is power, and in taxes, it means keeping more money in your pocket. Understanding deductions is essential for financial health. Play the game well to avoid overpaying. This guide is your co-pilot on this journey. Simple, clear, and actionable advice. Because you've worked hard for your income, keep as much as the law allows. Tax deductions might seem complex, but they're simpler than you think. Everyday expenses like your car, home office, and phone can be significant deductions. Learn how to identify, document, and claim these costs to save money. Let's unlock these potential savings together. Alright, let's shift gears and talk about something many of you self-employed superstars use almost every single day: your car. Your vehicle isn't just transport, it's a potential goldmine for tax deductions. If you use your car for business, you can recoup some running costs. This can make a noticeable difference to your tax bill. Don't see it as an expense, see it as an opportunity to save. What counts as business use? Meeting clients, picking up supplies, or attending events. Track your miles and expenses to maximize your deductions. Be proactive, not reactive, with your finances. First up, we have the standard mileage rate. Think of this as the keep it simple option. The IRS sets a rate per business mile driven. Track your mileage, multiply by the rate, and that's your deduction. Or use the actual expenses method. Add up all car-related expenses and calculate the business use percentage. Choose based on your specific circumstances. Section 3. Proof is in the petrol log, mastering your car records. Records are non-negotiable. The IRS demands meticulous proof for car deductions. No paperwork, no deduction. Keep a detailed mileage log and all related receipts. Embrace technology for easier record keeping. Consistency is key. Make it a habit. Making your homework for your wallet. Let's talk about the home office deduction. For many self-employed folks, your home is where the hustle happens. The daily commute has shrunk to a short shuffle. The IRS allows you to claim a portion of your home expenses. It's a legitimate way to reduce your taxable income. If you use a part of your home for business, you incur costs. Why shouldn't you get a tax break for that? Claiming a home office deduction is now more accepted. Follow the rules properly. This deduction is a fantastic opportunity. Your home is pulling double duty. Make your home work harder for your wallet. Understand the requirements and calculate your claim. Knowledge is power and potential savings. See your living space in a different light. Your home office could be a key component of your tax strategy. We're not encouraging you to claim your entire house. Understanding these deductions is a must. Let's break down what makes an office deductible. No more leaving money on the table. Section 2. The not-so-secret lair, rules of the roost for tax perks. The IRS has two main gatekeepers for the home office deduction: exclusive use and regular use. Exclusive use means your workspace is only for business, no personal activities allowed. Regular use means you use the space consistently for business. It must be your principal place of business or where you meet clients. Understanding these distinctions is paramount. Section 3. Counting the pennies or pounds. Simplified versus the full Monty. The IRS offers two methods: simplified and regular. Simplified is straightforward, a set rate per square foot. Regular involves detailed tracking of actual expenses. Choose based on your situation for maximum benefit. Simplified is easy, regular might yield a bigger deduction. Flexibility to choose each year, but watch for depreciation rules. Section 4. Paper trails and picture-proof nailing your home office admin. Keeping good records is non-negotiable. The IRS won't just take your word for it. Think of your records as your trusty shield, protecting your legitimate deductions. Without proper documentation, even valid claims can unravel. Let's get organized with our admin, shall we? Preparation is everything. Section 1. Your pocket pal, your profit partner, dialing into deductions. All right, let's get connected and talk about that gadget you probably can't live without, your mobile phone. Seriously, when was the last time you were more than 3 feet away from it? For the self-employed, your phone is your lifeline to clients and your primary means of communication for all things business. A portion of its cost can be a tax deduction for the 2025 tax year. It's time to make that device work for your wallet, not just your social life. The key is understanding the rules and keeping good records. With some know-how and consistent tracking, you can claim your fair share. Section 2. The percentage puzzle. Separating business banter from personal prattle. Most self-employed people use one phone for both business and personal stuff. The taxman will only allow you to deduct the portion of your phone expenses that directly relates to your business. You need to figure out your business usage percentage. This is the magic number that determines how much of your phone bill you can actually write off. So how do you calculate this percentage? There isn't one single IRS-mandated method, which gives you some flexibility. One common approach is to go through a few representative phone bills. Look at your itemized call logs, data usage, and text messages. Identify which calls and what proportion of your data usage were for business versus personal reasons. From this analysis, you can establish an average percentage. For example, if 60% of your calls and data are business-related, then you can apply that 60% to your total phone expenses. Say your monthly phone bill is $100. If 70% of your phone use is for your freelance photography business, you can potentially deduct $70 each month. The crucial thing is that your percentage must be realistic, and you must be able to explain how you arrived at it if asked. The IRS appreciates a well-reasoned approach, backed by some form of analysis. If you have a dedicated second mobile phone solely for business, the entire cost is generally 100% deductible. However, you still need to ensure it is genuinely used exclusively for business. Honesty and accurate record keeping remain paramount, even with a separate line. Section 3. Log it or lose it, keeping tabs on your talk time. Records. When it comes to claiming your phone expenses, your documentation is your best mate. The IRS isn't just going to accept your neatly calculated percentage without a way for you to demonstrate its validity. You need to be prepared to show your workings. So what kind of records should you be keeping? Firstly, keep copies of all your phone bills. These itemized bills are golden because they often show call durations, numbers called, and data usage. If your bills aren't detailed enough, you might need to keep a separate log for a representative period. This log could note the date, time, purpose of business calls, and data used for business tasks. For any significant business-related calls or data usage, making a quick note of the business purpose can be incredibly helpful later on. Making this record-keeping less of a chore is all about finding a system that works for you and sticking to it. Some phone providers offer online dashboards where you can analyze your usage and even tag calls. There are also apps available that can help you track call types or data usage per app. Even a simple spreadsheet, where you periodically review and note down your estimated business usage for the month, can be sufficient if done diligently. The key is to do it regularly, not try to reconstruct a year's worth of usage from memory in a panic. Without adequate proof, the IRS could disallow your deduction, meaning you pay more tax and potentially face penalties. But with clear, contemporaneous records, you can claim what you're entitled to and enjoy those tax savings with peace of mind. Think of it as an investment. a small amount of your time for a tangible financial return. Stay organized and proactive to maximize your deductions. Right then, we've navigated the roads with car deductions, set up shop with home office claims, and dialed into phone savings. But hold your horses, because the Deduction Express hasn't quite reached its final destination for 2025. One of the big ones in our always online world is your internet connection. That broadband or fiber optic cable pumping data into your workspace. It's a critical business tool, and that makes a portion of it deductible. This is especially true if you're already claiming that home office. How much of your self-employed grind relies on the internet? Client communication, research, marketing, accessing cloud-based software, invoicing, banking? The list is endless. For most modern sole traders and freelancers, the internet is fundamental. Therefore, treating it as a legitimate business expense is reasonable in the eyes of the IRS. If you have a dedicated internet line used exclusively for your business, the entire cost is usually deductible. More commonly, you'll have one internet connection for your whole household. In this scenario, you'll need to determine a reasonable percentage of the cost that reflects your business usage. This requires an honest assessment of how much of your internet time is genuinely for work purposes. Calculating this percentage doesn't need to be a forensic investigation, but it does need to be sensible and justifiable. You could estimate based on the hours you spend working online versus personal use. For instance, if you reckon 60% of your internet usage is for your business, you can deduct 60% of your monthly bill. The key, as always, is to document how you arrived at your percentage and keep those internet bills religiously. This little bit of admin can lead to some rather pleasing savings. Stay diligent and enjoy the benefits of your hard work. All right, let's broaden our horizons beyond the big three and your internet. There's a whole galaxy of other potential deductions out there for the savvy self-employed individual in 2025, and one category that's super important is business insurance. The premiums you pay for various types of business insurance are often fully deductible. This is because insurance protects your business from unforeseen circumstances, making it an ordinary and necessary expense. What kinds of insurance are we talking about here? Professional indemnity insurance, public liability insurance, contents insurance for your business equipment, or even specific cyber insurance. The rule of thumb is, if the insurance policy is directly related to the operation and protection of your trade or business, the premiums are likely deductible. But wait, there's more. The deduction party doesn't stop with insurance premiums. Think about other regular outgoings. What about those pesky bank charges on your dedicated business bank account? Usually deductible. Subscriptions to industry-specific magazines, online journals, or essential software tools that you use for your business. Those can often be claimed too. Even costs associated with professional development, like relevant training courses or workshops, can be legitimate write-offs. These smaller amounts all add up. So, the overarching message for these other deductions is to keep your eyes peeled and your record-keeping sharp. Many of the everyday costs of running your venture, beyond the obvious ones, can contribute to lowering your taxable income. It's about developing a mindset where you critically assess your expenses. Is this an ordinary and necessary cost of me doing my business? If the answer is yes, then investigate its deductibility. Always keep detailed invoices and receipts, and if you're ever in doubt about a specific expense, it's always wise to consult with a qualified tax professional. Don't leave your hard-earned cash on the table. Be proactive and diligent to maximize your deductions. So, there we have it, folks. We've journeyed together through the often confusing landscape of tax deductions, specifically looking at your car, your home office, your phone, and even a few other bits and bobs like your internet and insurance. Hopefully, this hasn't just been a list of rules, but a genuine eye-opener. Understanding these deductions isn't merely about saving a few quid here and there. It's about financial empowerment. It's about you, the self-employed superstar, taking control of an area that can often feel overwhelming. The 2025 tax year doesn't have to be a source of anxiety if you're properly armed with this essential knowledge. This guide aimed to be your friendly co-pilot, demystifying the jargon. It's absolutely crucial to remember that these deductions are not some sneaky, under-the-table tricks to outsmart the taxman. They are legitimate IRS-sanctioned provisions designed to acknowledge the very real costs associated with running your own business. For the freelancers, sole traders, and small business pioneers across the USA, these deductions are a vital lifeline. They help to ensure that you are taxed fairly on your actual profits, rather than on your gross income before these essential operational expenses are considered. It's about creating a more level playing field, acknowledging the financial realities of being your own boss, and covering your own costs. We've touched upon the different methods available for claiming these expenses, offering you choices. For your vehicle, you've got the straightforward standard mileage rate or the more detailed actual expenses method. When it comes to your home office, there's the simplified option based on square footage, or the regular method which allows you to tally up actual costs. Even with your phone, calculating that business usage percentage is key if it's a shared device. These options exist to provide flexibility, allowing you to tailor your approach. Keep learning, stay curious about your business finances, and always be on the lookout for legitimate ways to enhance your business's financial efficiency and health. This proactive stance is what really pays off. Documentation is key. Meticulous records are your armor against IRS scrutiny. Use technology, simple systems, and consistent habits. Seek help if needed. Conquer those taxes.